Saga fit for Hollywood in itself. Of course, that's the Netflix and Warner Brothers Discovery tie-up that's in the works at the moment. Of course, Netflix came out last week and superseded Paramount and Comcast, putting in its $27.75 bid in cash and equity that values the company, it's around $72 billion, $83 billion if you include the debt. And that values Warner Brothers at a pretty punchy multiple of 25 times enterprise value to EBITDA, which is the high end of prior M&A deals that have happened in the space over time. But certainly Netflix has come out of the blue. Of course, they were always in the mix when since they put their hat in the ring and said they were going to look at the company and address and identify that whether it was a good purchase going forward. And that happened in late October and sort of ramped up through November. What we're seeing is Netflix entering into exclusive talks coming through. There's a number of precedents that have been set here. I mean, we're talking about a $59 billion financing bridging loan that's come through for a number of banks. That's a massive amount of money. I think it's probably one of the biggest financing deals we've ever seen in the space. Netflix have said that they're so confident about the situation that they've entered into part of a clause of a $5.8 billion breakup fee that's come through, which is 8% of the equity involved. I don't think we've seen a breakup clause that's so punchy in that situation. So Trump's already come out and said that he wants to investigate this, that he wants to look into this and have the final say because of the market share that comes through. The Department of Justice in the US has said they're investigating this, as will global regulators coming through. And I guess that's why you're seeing Warner Brothers stock trading at a 6% discount to that offer price of $27.75. Is there something in there for the special situation traders, the arbitrators, who would say, well, there's a 6% discount. I feel very strongly this is going to go through. And then obviously you can pick up that 6%. Or, if Paramount was to come through and make this $30 a bid formal and go direct to shareholders, perhaps that could push the share price up even more. But that regulatory situation is a concern, and that's why that discount is there. But and that may take some time to heal. I mean, it might not happen overnight that you're going to get the regulators coming with a final say, and of course this needs full shareholder sign-off coming through. Now for Netflix in this situation, this is a great asset going forward. I think the shareholders have been a little bit sceptical about this over time. It's created some overhang, and that's why the stock sort of gravitated back towards 100. People have obviously know that the HBO assets are brilliant IP. Obviously the royalties from things like Game of Thrones, The Wire, Harry Potter, DC Comics are obviously there. The synergistical benefits are there going over time. This is going to be EPS accretive after year 2. But you're effectively going to be left with the world's biggest streaming service going forward, with 325 million customers on its distribution and growing. But you're going to be left with this behemoth of a company. But it's going to be an interesting one. What is the opportunity for the arbitrators at the moment? And will this get regulatory blessing over time? It's for everyone to see. It's a story fit for Hollywood. Trade at Pepperstone.